In this video, I'm going to talk about financial scams to avoid, the small sample sizes scam. Stay tuned. Hey traders, a very warm welcome to you. Okay, so what's the small sample size scam? How do we avoid it? What do we look out for? So this is really a scam. It's a broad terminology, but basically if you're looking to invest in a product, or you're looking to buy a system or a strategy, or invest money in any way with some kind of trading strategy, system, approach, method, however you want to call it, you need to be careful of the small sample sizes scam. What is it? So small sample size is basically showing you such a small section of trades that you can't make an informed decision. You know, as traders, we want to take a trade that's profitable over time as many times as possible to see if we have an edge. That's the point. Otherwise, if we have a small sample size, we've got lots of noise there. We've got lots of random occurrences, lots of random outcome. In fact, if you drew a trading system based on tossing a coin, so in other words, no system, a 50-50 outcome, and let's say, for example, heads, you made £100, tails, you lost £100. You and I both know that if we did a million tosses of that coin, we wouldn't lose anything. We'd make some, lose some, make some, lose some. But to get to that point, let's say our starting point is 0, we would probably, our equity curve would probably look something like this. And in fact, any random kind of permutation of this, a bit up, a bit down, bit up, bit down, and then we might have a series of heads in a row that brings us right up to here, a series of tails, but then again, we might have some heads again, and then we have our tails come back in, and then we might have some heads, you know, and then we end up back at our 0 point, okay? And this is positive, and this is negative. The point is, guys, is that if we had this as a strategy, bearing in mind it is no strategy at all, right? It's just a coin toss, so let's put as the 0 line there. If we had that as a strategy and we had a small sample size, we're trying to sell this kind of system, we were trying to sell this kind of product or investment vehicle, whatever it is, if we were unscrupulous, we might say, okay, well actually from here to here, look at that return. You know, this is the most amazing system in the world. Wow. You know, look at that over a period of whatever that may be. Let's say we've got, I don't know, 50 tosses of the coin or 10 tosses of the coin. Hey, you've gone from 0 to £2,000, whatever it may be, all because you've had a string of heads in a row and a few tails, a string of heads, a few tails, and it looks like you've got a really amazing profitable system. But in actual fact, it's a 50-50 coin toss. What's the point in me drawing this? The point is that anything, the system has no long-term edge, i.e. a 50-50 system, will still exhibit excursions away from the expected outcome or expected mean. In this case, 0 is the expected outcome of it, or the known outcome of it, but you're going to get drifts away from it. And the casino model is very, very similar, except the expected outcome is going to be up here for them because they've got a slight edge, let's say 100 million or whatever it is. So you'll still have this kind of chart and shape, but ultimately after enough occurrences it's going to end up positive. And that's what we try to do with trading as well. You've got that small expectancy, a positive expectancy. The pathway to that may well be jagged and may well have losing periods in it, but ultimately if the edge plays out, it's going to be good for us. So this short track record sample size scam is basically saying, hey, you know, in the last X trades or last year or whatever short is based on the time frame of the kind of methodology they're using, is just not accurate. It's not true. It's saying, well, you're just taking bits of noise there. That's completely irrelevant. It doesn't make any sense. I want to see how it's performed over a decent period of time. That's the only way I can tell whether this thing has genuine edge that will be useful to me or not. So keeping a mindful eye on that if you're going to be buying anything or getting involved in anything systemized, system strategy, investing in something, whatever it may be, just being mindful that, hey, remember this chart, the 0 to 0, the 50-50 coin toss, you'll still get that. So even if this is negative, let's say this has got a negative expectancy and it's an awful system and you've got an expectancy of -50, you could still get periods where it's reasonably profitable. And if they're just taking that, waiting for that reasonably profitable period, and then saying, hey, let's use that as our marketing material, you know, it's a little bit shady. Unusual results. Same kind of thing, using your gut and just going with your gut feel about this one, guys. If the results look a bit too good and you think, hey, this is only a few small sample size and it's done really, really well, you know, just think about, hey, does this in real world happen like this? From your own experience, if you're a trader, you know that you may have those big wins, several big wins and losses, but over time, you know, it's where it ends up that matters the most. And number 3, no real money invested. You know, if it's a scam system, if it's a system where people are just out to make money from selling the system or from investing other people's money in it, they're not going to have any real money invested, or very, very little real money invested. Unlike a hedge fund, for example, which has got a lot of the manager's money. And actually one of the things you look for in a hedge fund is that a manager has got a lot of his own personal wealth invested in the fund, because he's got skin in the game. He's only going to hopefully take trades and ideas that he believes are really, really good for long-term success. He's not going to play the game of trying to get short-term wins at long-term detriment, because his wealth's in there. So, you know, looking for real money invested, how much of the money manager has, how much of his own funds are involved in it. If it's a system, how long has someone used that system, and how much real money have they put in? Have they put real money in? So just watching out for that one, guys. The small sample size scam. We can take any period we want, and if a small enough sample size, make even the worst system look good. So keep an eye out for that one, guys. All right, guys. See you in the next one. Keep the risk managed. Take care. Bye-bye.